Welcome, everybody. My name is Steven Sitkowski. I'm the Chief Investment Officer and founding partner. I am so happy to have all of you with me for this week's edition, Market Insights. Let's get to it. Quick disclosure that this presentation is for educational and purposes only, not intended as investment advice. I'm not acting in the capacity as an investment advisor, but rather an educator, sharing my personal observations and thoughts with all of you. So market considerations, what are the fundamental influences out there that's helping the market to move or not move? Look at overall market conditions, various sectors, which sectors are on the move and doing well, which aren't doing so well. And maybe talk about some individual stocks that I can bring to your attention. You may want to do some of your own analysis on. So here's what's moving the markets. Big earnings week coming up. The biggest of the big this week, Wednesday, NVIDIA. So everybody's just kind of sitting on their hands, more or less. Don't expect the markets to do a whole bunch, at least the NASDAQ, until NVIDIA announces. Today, NVIDIA had a really nice move, today being Monday, going into this announcement. This is maybe the last big week of earnings announcements for a while, but it's definitely something that you should follow, because earnings definitely move the markets. I'll also say this to you, for those of you who trade options, I do not recommend holding an option through an earnings announcement because they are so unpredictable. China cut their 1-year rate of interest. China's economy is really sluggish. Their reopening has not gone the way that they or anybody else anticipated. It'll be interesting to see what they do, especially among young people. They have an unemployment rate of over 20%. Our general unemployment rate is about 3.5%. We have the Jackson Hole meeting where the Fed is getting together, other world leaders. It's kind of cool. They're staying in the same place that I stayed a week before they came a few years ago. It was kind of nice to see that on TV. It's a really neat property. There's nothing terribly fancy about it, but it's a great place to stay. Terrific location. And the good chairman, Jerome Powell, will be speaking on Friday. And last year, when he did this, he tanked the market. And I suspect he's going to try to do the same. He's going to talk about how there are still pockets of the economy that are ripping, and that inflation is still too high, and that they're going to have interest rates higher for longer. By the way, the next interest rate announcement will take place September the 20th, and that should definitely be a market mover. The 10-year Treasury has risen to 4.326. This time last week, it was about 3.8 and change. And oil is fairly steady in the low 80s. So what to watch this week? Tomorrow, Fed President Tom Barkin, he will speak. Wednesday, we got the PMI numbers, so both for services and manufacturing. Get a pretty good read on whether the economy is expanding or contracting. Thursday, the Fed officials interview from Jackson Hole Summit, so that'll be going on. The initial jobless claims, which come out every Thursday morning. And then Powell on Friday gives his speech. And then we have the University of Michigan consumer sentiment number that'll come out. It's been pretty good. This is last week's heat map, kind of the only bright spots: NVIDIA, Lilly, Cisco, Applied Materials, TJX. A lot of red, but for the year, it's been a fantastic year. If you've been in the right stocks, NVIDIA is up 210%, Google 44, Amazon 59, Tesla 83, Lilly 50%, Microsoft, Apple. We have taken trades on all of those stocks this year. You'll notice that when you look at the percentage of stocks on the S&P 500 trading above their 50-day moving average, that number's been moving down. So, it was over here at 75%. Now it's 36%. So we've definitely given back, and you'll see that when I pull up a chart on the market for you. Interest rates are a major concern. The 2 years up almost to 5%, the 10-year about 4.25. So the 10-year correlates to mortgage rates. So that's not good for mortgage rates, which now are over 7%. Yield curve is a bit less inverted. That's a good sign. That's where we compare the 10-year and the 2-year. And when the 2-year is higher than the 10-year, we call that inverted. That is the number one precursor for a recession. But I'm telling you, we're not going to have a recession anytime soon. Labor market, far too tight. Put call ratio jumps. People are getting more nervous about the market, so they're buying more puts now. So more puts than calls at this point. September looms. September, I don't know if you're aware of this, is typically a down month. So May is a little down. Generally, we don't have a whole bunch that happens in August, but September is when the market generally falls. Believe it or not, October, which scares the hell out of a lot of people, that's where we have the most volatility. But it's generally an up month. And that goes for the NASDAQ as well. Look at negative returns on the NASDAQ in September. So people start liquidating in August, drives the market down a little bit. But I'm telling you, the fourth quarter of this year ought to be gangbusters. You're going to start seeing those earnings numbers moving higher. These are the pre-election patterns. So, again, once we get past this little trough, I think we're going to do really, really well for those who are well positioned, know how to pick stocks on which to do trades. These are the year-to-date returns by sector. So communication, tech, and discretionary has been crushing it. Industrials and materials, they've had a little give back. They were getting better. Energy's finally turned positive. Financials, healthcare, staples, REITs, and utilities, these are all the quote-unquote safe havens. Well, they've lost money this year. So it is critical that you follow what's happening in the various sectors. Let's take a look at the charts, see what they have to say. So I'm going to start with the SPX. It's the S&P 500, an index consisting of 500 large cap stocks. So that yellow line right here, that is a 50-day moving average. And you will see that, this is a 6-month chart. We had a really nice run. We rolled over, we crossed below that 50-day. And now we've had an up day. So I think our next key level is probably right in here, 43.20. We're at 43.99. So we're not far off of that. If it breaks below that, well, we could be, heading down here. So a little above 4,100. That's a pretty good dip. Hopefully we hold at these levels. So, overall for 6 months, we're bullish, and you can see that the 50-day moving average is still sloping upward, but we've now crossed below that. So, the market is kind of at an inflection point. So I'll be watching this for you and reporting again next week. How about the Qs? Same kind of a deal, closer to its 50-day. If this crosses back above, that'd be a good omen for tech. And a couple of individual stocks I think worth looking at. There's Amazon, which has had a beautiful run and bounced off its 50-day. Great sign. Lilly, got trades on it. I have trades on Amazon. Look at that. So moved up at earnings and has been going ever since. Here's probably an undervalued stock in Pfizer. So that looks like it's made a bottom and could be heading higher, and it's just crossed above its 50-day. NVIDIA made a big move. Look at that. Again, bounced off its 50-day moving average. Can it set a new high? We shall see. That's all going to depend on their earnings announcement, which apparently the market is expecting will go well. Tesla. So Tesla has just fallen out of bed and recovered a whole bunch today. We'll see if there's any follow through. If there is, there could be an opportunity for a bullish trade on Tesla. So I'll report back to you next week. So appreciate all of you taking a look. And I'll be doing these on a weekly basis, just keeping you apprised of what's going on out there in the market. I know many of you have ended up in classes that I've done, so I'm familiar to you. So just a really nice way for me to touch bases with you on a regular basis. All right, till next week, stay blessed. I'll see you then. Bye for now.